All right, hey traders, this is Christian from Arts Tribeca Trade Group, and today is Thursday, August 29th. So we got one more day before the 3-day weekend. It did feel like today, it felt like today was the Friday, right? So I wonder how tomorrow is going to be, even a bit quieter today. But it was. I think for the most part, this afternoon was a little bit sleepy. I think more and more people will be kind of heading out for the long weekend. I will be leaving a little bit early, so that includes me. I will be leaving a little bit early tomorrow, so we can expect things probably, volumes to slow down a bit. We'll see if we get any more headlines. I think really that's the main concern. In terms of this herky jerky market, what's been going on a day-to-day basis. Remember last night when I went to bed, futures were down about 0.5%, and then there's a positive headline about trade, and we opened up right around 1% on the day. The average, I'll get back to these technicals in here. IWM was the outperformer again. You could see SPY, did manage to rally after the open to finish. Like I said, I was right on the screws. We opened up about 1% in the SPY, and managed to rally about 30 basis points throughout the day. So nice follow through. I think given the way this market has been going, yeah. Again, small caps, nice couple day performance here, right when they were, looking like they were awful and looking like they were about to break down. Bonds were all over the place this morning. There was an auction that sent them a little bit lower. There was a nice tweet that I saw. I may be saying his last name wrong. Kawa. He mentioned that if you've been trading based on the bond auctions, you probably would be down a lot of money. I haven't really paid that much attention to what happens to price after the bond auctions, but yeah, I mean TLT was down at 1.1%. There's a 7-year auction that had low demand, but I guess if you're positioning around that, from what he was saying, that there really hasn't been much trend, and probably fading the auction move. Sounds like it's been a better move, but nevertheless, TLT did finish down on the day, but came back from the lows. Gold wasn't a factor at all today. Uh, Actually started the day flat, and finished the day down on the day. Silver, I think, down as well today. So a breather there in the precious metal space. We'll see if that is a buy the dip opportunity in precious metals. We'll see if buyers come back in. That's something I would be watching for tomorrow, because it seems like whenever we've been getting the last couple of weeks, a little bit of a move down in bonds and precious metals. They've been buying opportunities, so we'll see. These things can change. Sometimes when you just get used to a pattern, sometimes things change around. For the second day, I believe oil and gas names outperformed. XOP was up 3.5%. Oil services, banks were up for a second day in a row. So some of the unloved areas were the biggest outperformers. Software did a little bit better today, up 1.7% today. Kind of rocky. At one point, looking like it was going to break down. Some names got looking like they were going to kind of fold to the downside around 10 o'clock this morning. They came back. Fang had a real nice day today. You could look at the Fang stocks. Finished. I mean, look at Facebook, finished up 2%, but these really rallied nicely from the open. Mainly Facebook there, Netflix. So a little bit better performance from the S&P for the change from the open. Yeah, so those names did pretty well. Roku had a nice day, finished up 2.7%. Okta came back from the lows, but software names, kind of just interest software and cyber names, been kind of tough lately. I've had a tough month, I would say. They seem like they're getting hit sometimes. Some of them on good earnings. We had Workday, which really weird after the close. They missed the story of their guidance came out wrong, because they had a good quarter, and it looked like their numbers were light for guidance, and then later they came out and said that was wrong. The number was was reported incorrectly. Just looking at a couple names that reported after while I'm at it, a couple names that reported. Alta, interesting, right? All the way down to 266. Where does that line up? Well, if you look at the 1 hour, you can see two VPOCs taken out. There's another one all the way down here at 243, but that's pretty far. If you go to the weekly chart, um, that's the daily chart. Weekly chart, so it's going to be a break of the 200-day moving average, but 262 is where I see support in that one. A couple other ones, again, these earnings seem like they're really, really difficult to predict. AMBA is up nicely, and then MRVL, which is the one I played, which we saw a lot of call activity, out of the money call activity in this one yesterday, and this name is down $2, I think, or $1.50, around $1.50. So let me go back to the S&P chart as we went over what names, what performed well today. Let me just go back to this. Gold miners, I just wanted to see which names didn't perform well today. Solar, ENPH was I never saw what the news was that drove this stock down. It was down 10% at one point. Remember all this call buying in this name? Another example, I'd like to point this stuff out because nobody else does. But they bought calls like crazy, all in here. So, sometimes you can take advantage. I don't know if they sold out of some of their calls today. I did see this one print this afternoon that may have been a sell. January 35 calls. But again, no one points this stuff out. Everybody will only, it's great when you get a winner, right? When you see option activity and it works really well. And I think there's a lot of bias to it. But this is a name that's seen a lot of call activity all around the highs, after they reported earnings. So we'll see. Maybe buyers will come in here. It is holding the 20-day moving average. I took a shot at this in the middle of the day. So I've wanted to get in this name for a while, and as long as it's holding that 20-day moving average, we'll see how it goes. What else was I going to say about the performance? Oh, I'll talk about some of the hurricane plays. But yeah, let's just look at this chart of the S&P. This is a perfect trapezoid pattern that we've got going on. I'm just kidding. I think sooner or later, and I mentioned to be wary of getting really used to this back and forth action. Sooner or later, this is going to break, right? What I kind of look at is, obviously sentiment. Sentiment has been really low. So, just because sentiment is really low, it doesn't mean that we're going to get a rip your face off rally. It usually means you get a short-term bounce. And then that sentiment kind of comes back in, and then you don't have really low sentiment anymore. However, some of the things that we've been hearing about, right, like all the recession in the news, people trying to predict when the next recession is, the inverted yield curve. What I also besides the inverted yield curve, what I think is more important, it's important. The yield curve and what that's telling us, but it's credit spreads, and it's something that I probably bring up in these videos every couple of days. Look at what's going on here in credit, right? I mean, this got a little bit, did make a high for the year for credit spreads, but they're really kind of trailing off. There was also a lot of ETF fund inflows going into high yield over the last week, just yesterday. So if it was really that bad, and what would get me even, more worried is if we saw a spike in high yield credit, in the credit spreads. Remember, this is what happened in December. So this doesn't seem anywhere near as dangerous right now, for now, right? And something could change and it could cause it to spike, but it almost looks like this wants to come in a little bit further to me. Maybe I'm jumping the gun here, but and then the other thing is, right, the VIX, has been making lower highs, right, since this happened. So again, I'm always trying to change. I'm changing. I'll change my view, and sometimes I'm a little bit more negative and a little bit more positive, but just trying to read the tea leaves here a little bit. And notice that the VIX, all it takes is it could snap back one day. But this to me is saying, here is your high in the VIX, lower high, and then the last, trade war rhetoric stuff. a less, a lower high in the VIX. So, not confirming that volatility that everybody thinks. Now, again, the VIX and so forth, all they do is they measure short-term implied volatility in SPX options, right? It's not there's no psychological, uh, you know, factors in this. That's all it basically does. Now you can maybe argue that that shows that there is some psychological in that, but that's really probably indirect. Skew, which I sent this out this weekend, and people were like, "Oh, well, skew doesn't mean anything." All right, well, that's fine, or it hasn't been it's not a predictor. No, it's doesn't, the job is not for skew and the VIX to be predicting anything. It just kind of tells you what is going on presently. These things are not, all of these things, they're not a crystal ball reading. It just basically gives you a snapshot of what's going on, and that kind of helps you make a decision, right? That's the whole process. But if you look at a 2-year chart of skew, remember towards the end of the summer, skew got really high. And obviously we had a decent correction at the end of the year. This is not right now showing that. So, you know, I think if the headlines die down, and this is what I said last week. I mean, we almost broke higher on last Friday. If it wasn't for the increase in trade tariffs, we probably would have gone higher last week. So it all depends on that, right? On the headline risk and so forth. But without that, it seems like this market wants to resolve itself to the upside. So that's the big if, right? And maybe I'll leave it there for the for the day. But I'll give you a couple things. I mentioned the hurricane trades. We really hit this one pretty nicely. This is Home Depot that we got into yesterday. I rolled this trade, I think, 3 times. I took profits. I'm very cognizant about the way options work. And trying to stay in a trade if you're in stock, it's much easier, in my opinion. For options, you get a nice move, and personally, I want to hit the sell button. So what I do a lot of times is I roll. I was in October. Home Depot options are $5 apart. Strikes are $5 apart. So what I do is, I bought some options, I think, for $4, took them off at 7. When I rolled out to the next strike at around $4, took some more off at 6, rolled the third time, and then took that off. But I do think these hurricane trades have something to them. Now I think the news is out there, right? And sometimes the way that the hurricane trade works is you buy the rumor, sell the news, like many other trades. So once like the hurricane actually hits land, that's usually when these things start to fall, right? Again, I'm just explaining this in case you've never seen the hurricane trade, but like Generac and so forth, once the hurricane starts to hit the news that there is a hurricane, or the day before, that's when you should be, in my opinion, buying. Once it actually hits landfall, that's when the trade is usually over. Because a lot of times it is what it is, and I hope that there's no damage with these hurricanes. But normally it's a lot more angst leading up to the actual event. Again, just like many other events that happens in trading. But I will say this: there was calls in lumber liquidators out of the money. There was calls in FND. There was, which I like the chart of FND. I think this can go a little bit further on the weekly chart. Could possibly hit 53. Summit is another name that acted very well today. Summit Materials was its new 52-week high, I think, for Summit. This is a name that we've come back to a few times, but and then the other one, which is a new one, which I saw today. Oh, and Generac, that's not the new one, but Generac has already made a really nice run this year. The one that I saw was GDI, which we saw calls in today. Not a big mover. I did go into this trade. I think it's good risk to reward down here. So as someone else told me on Twitter as well, that they thought it was good risk to reward. But I liked how this VPOC was taken out. So other trades, you could see EW, I think there's some type of event for this, either like an analyst day or something to that effect. Here was the GDI order. Morgan Stanley put selling in this one. I mentioned ENPH. I think originally a little bit of buying, but they may have also sold some calls. PDD, which has been on fire. There's a lumber liquidators like Hertz, a little bit of Twitter calls too, momentum short-term calls. So there's definitely some risk taking in single stock, even though it's a quiet day, or supposed to be, a quiet day. Put call ratio kind of sunk down a little bit. You remember it's been heightened. Finished around 8.85, so I think right in line with kind of the average. So coming off some extreme bearish levels. All right, guys. So we'll leave it there for now. I think as we need to get through August, which is a seasonally weak month. But for now, take it day by day, and I will tell you this: this has been usually August are a bit more challenging to trade, but I think that this is one of the hardest. Going back to the trapezoid pattern that I was making up here. If you've managed through this, make sure that you have written down some learning lessons from this. I think, as I know a lot of people trade options and swing trade options, I think this was all about looking back on the month, positioning, right? If you were very light positioning, as you kind of generally should be in August, then you probably fared a little bit better. And if you were able to play things on the downside, uh, also probably did a little bit better. But don't let anybody fool you. I saw somebody the other day tweeting out like, "Oh, well, this is where you should have gotten short, and you could have gotten long and short and long and short, and made money on." Come on. I hate when people do that when they kind of look back and they're like, "Oh, well, here's where you should have gotten short, and then you could have gotten long, short, long, short." Like, come on. With this joker on Twitter, I see who's got 100,000 followers who likes to call these moves all after the fact. But it is what it is, right? You have people on Twitter that do that. I mean, nobody has a crystal ball and could tell you that we were going to go back and forth like this. So keep this in mind because we do see these types of consolidation. I think this is one of the bigger consolidation periods that I've seen in a long, long time with that intraday volatility like that. So, if you made it through and you're still alive and kicking, you've done a good job, and there's definitely some takeaways and lessons to learn. Remember, as a trader, you always want to take those situations away, learn from them, write them down in a notebook, and build from it, right? And then you can kind of go from there. All right, guys, have a great night. See you tomorrow.